Rather than spend rather than spend 40 hours in the first year of your business, spend 4 hours every single year. And those 4 hours, it's enough to think logically about, all the aspects of a business plan.
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
Hi, thanks for joining us for another episode of Ask Spurl CPA. Today, as the Edmonton Business Consultant, we're talking about how even the best business plans lie. So again, as the Edmonton Business Consultant, we're talking about how even the best business plans lie. I have May here with me today. May, how's your week been?
Oh, extremely busy, but it's also a good thing because it's not only the fact that we're growing, but it's the fact that more and more of these businesses are trying to now understand how to become successful, and they're asking for help instead of trying to do it by themselves, trying to find this way. They're trying to find that expert advice so they can continue growing their business.
Right on. So the quote that we have here today, it's a Benjamin Franklin quote, one of the founding fathers of the United States, and it says, if you fail to plan, you are planning to fail. If you fail to plan, you are planning to fail. And the statistic that we have when it comes to business plans is from, Palo Alto, and they tell us that businesses that complete a business plan are 50% more likely to grow their revenue. So businesses that do a business plan, they're 50% more likely to grow their revenue than businesses that don't. And we remember that, the failure to attract new revenue is the most common reason that businesses fail. And this is your number one way to solve it. And the story that we have here, business owners think that they'll be able to consider all of the relevant variables in a business plan, that it'll be this master plan that is absolutely infallible. So, May, what are the questions that these business owners should be asking when it comes to, their business plan?
They should ask, are business owners who complete a plan more likely to grow their business?
Yeah. So, by all accounts, the data shows us that, 50%, you're 50% more likely to increase your revenue if you do a business plan, and that's any old bad business plan. And we like to think we do better than bad business plans here. And we've seen it anecdotally with our clients too. They're just more likely to grow their revenue if they have a plan in place to grow that revenue.
Are business owners who complete a plan less likely to run out of cash?
Yeah. So, running out of cash, that's, one of the significant pain points. And by doing a business plan, you start to get the realistic projections and the timings of the cash flow, what's going to happen while you're scaling up the business and while you're adding in extra costs to the business, and how that's going to affect your cash flow on a forward-looking basis, so looking out into the future month by month by month. And if you plan that out, you're less likely to run into those circumstances where you're just going to run out of cash. So yeah, it makes them less likely that they're going to run out of cash by completing that plan.
And do business owners who complete a plan have a more concrete HR strategy?
Yeah, we try to address it in our plans. We have an HR section of how they're going to recruit new employees and what's their strategy to retain employees, and that can be lost. A lot of business owners, they like to do the stop and start HR method where they look for someone when they need someone, and as soon as they have people, they stop looking. They don't train them. They don't look anymore. Then all of a sudden, there's always a crisis. They're always, really shorthanded, and it's, a long time away before they hire someone, or they have to hire the less than ideal person really quickly. So we think, that can be addressed in a plan and give you a better chance of success for sure.
And do business plans tend to alleviate the 3 common pain points in all businesses?
Yeah, so those are the 3 common pain points. So it's, when we look at businesses that fail, 42% will list that they couldn't attract enough customers. That gets addressed by a business plan. 29% of business owners will fail. Will say they ran out of cash, and that gets addressed when the cash flow projections of a business plan. And 23% of all businesses will say they failed because they couldn't find the right team, and that can be addressed in a business plan. And so those are the 3 common, pain points of any small business. And that business plan, it's not just the revenue; it can help you, tackle those pain points as well.
Is it possible to predict all potential future events in a business plan?
Here's where it breaks down a little bit, though. Although it's super effective for making it less likely that you're going to encounter one of those 3 pain points or reduce the impact, it can't possibly predict all of the future events that you're going to have. You know, people quitting at key times, losing key customers, changes in the market, failures of equipment, banks pulling loans, the business owner themselves getting sick, regulatory changes, supply chain issues. You can't possibly predict every future event in a business plan. That way, it certainly has its limitations. Even if it's done at the highest quality, it's always going to have certain limitations.
And is it possible for cash flow projections to be off in any business plan?
Yeah. So if we can't predict all the future events, or sometimes we can't predict them happening at all, and sometimes we can't predict the significance of them. That means the cash flow projections, they are just that. They are projections. They're a plan on what could happen or is likely to happen, but they're not necessarily a plan on what will happen.
Do you think you can make reasonably good predictions within 4 hours of thought?
Yeah, I think the average business owner can set a realistic vision for the business, because this business is already something they know about. They've been researching. They've probably even worked in the industry before. You can start making reasonably good projections and communicate a vision to financial professionals like ourselves, that we can then turn around and assemble decent cash flow projections. And I will tend to err on conservative cash flow projections, because I know that there's always these inherent limitations to business plans. So I don't see any reason to assemble these overly optimistic plans. Sometimes there's financing pressures that favor optimistic plans rather than pessimistic plans, let's call them. But at the same time, in absence of those pressures, I would suggest that if this is being done for the business owner's benefit, that you're doing a better service to make conservative cash flow projections. And the average business owner can communicate that vision and articulate the vision and the various pitfalls and risks and rewards in probably about 4 hours of thought and putting it on paper. They can do a decent job.
Does there tend to be diminishing returns on additional time spent on the plan?
Yeah, I think it's like anything. It doesn't matter how long you spend on this plan. You have to realize it's a plan, and there's going to be things that you just can't possibly consider. Maybe you'll just completely miss them altogether, or you don't understand their significance. And it doesn't matter if you spend 4 hours on that plan or if you spend 400 hours on the plan. You don't have a crystal ball. It is not a time machine. There is no way to predict it with 100% certainty. So because there's no way to predict it with 100% certainty, the value of that plan, the variables that you're uncovering, every additional hour that you work on that plan, it's going down, right? You'll think through a lot of issues in the first 4 hours, but I think in hour 8 now you're not thinking about as many. In hour 100 or 200 or 300 on this plan. Like at some point, you have to realize it's a plan.
Should you spend a little bit of time planning each year or lots of time upfront?
So because it's, you're going to learn about this business as you progress each and every year, I think rather than spend 40 hours in the first year of your business, spend 4 hours every single year. And those 4 hours, it's enough to think logically about, all the aspects of a business plan, from pricing to market differentiation to sales and marketing strategies to operation strategy. You can communicate a vision and think critically about those necessary variables in 4 hours. And I would recommend doing that each and every year, because as you progress each and every year through the business, you gain so much more experience, and probably that 4 hours that you put in year 2 is probably better than 40 hours you could have put in year 1, because you just didn't know as much, right? In year 5, that 4 hours is you're like an expert compared to that person who put in time in year 1. So ultimately, it comes down to a lot to eventually you got to implement this plan and see how the market receives it and see how the employees receive it and uncover the pain points in terms of the production and what are the limitations of the marketing and what can you actually fit in your calendar. So I'm always encouraging business owners you know, they're probably spending too much time on the plan. In year one, they come in with these glorious items, and you know, how many business owners do we see they come in year three and they've updated the plan by themselves once they're in the trenches?
Yeah, once they get that focus, they're just like, oh, it's so different from year 1 to year 3.
Yeah.
And that's how they know, like, business, that's how they know they're at least either progressing or now they switch their focus to the most important part of their business.
Yeah, I mean, the percentage of clients that come in year one who have some sort of business plan already it's significantly higher than the percentage of clients who will come in and they've already done the plan, you know, some semblance of plan in year 3, 4, 5. They just give up on it, and it tends to be, we need to focus them on to stop planning at some point in year 1 and start executing, and then in year 2, 3, and 4, and 5, like, keep understanding that there's a huge benefit of a few hours spent on planning each and every year. So I think that's what we have here today. Thanks so much for tuning in. As always, you know, please hit the like and subscribe button so we continue to deliver you tips on how to beat the odds at business. And as always, you know, please leave some comments below so we can answer back and use your input for future videos. Thanks very much.